Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today what we are going over is my three level of dividend stocks because my portfolio currently is made up of 24 different stocks, which I'm going to show you right now. I basically categorize them in my head into three different categories. I have my level 1, my level 2, and my level 3 stocks, and I'm going to show you the differences between all three of these in this video, between these 24 different companies that I own, and then I have them set into different individual pies. So in this video, I'll show you why the level 1 stocks are set the way that they are, why the level 2 are set the way that they are, and then also why level 3 are set the way that they are. But it's going to be a fun video. I'd invite you to subscribe if you haven't subscribed to me before in the past. My name is Jordan. I'm a Millennial Investor, and I track my annual and monthly dividend income through these two charts right here, as well as track my portfolio value and my monthly YouTube income. And we're going to update these new charts in about a week or so. So go ahead and subscribe to that and tune into that if you're interested in that. And if you want to see the brokerage that I use, how I make these pies, how I'm able to showcase all of my portfolio down below in the description, which is down below, by the way. If you want to get signed up for M1 Finance, it is absolutely free to use. You get $10 for signing up. We had another one sign up this morning, and we are now up to 61 people successfully referred. So go ahead and sign up for that if you're interested, as well as other things like if you want to speak one-on-one with me through the cell phone. There's things like mentoring calls, Yada savings accounts, credit card referrals, and tons of other stuff down below in the description. But let's go ahead and get started, and let's go ahead and look into the level 1 stocks. Out of the 24 in my portfolio, level 1 has 8, level 2 has 7, and level 3 has 9. So level 1 are what I call the optional stocks. These stocks are rotated in and out. These are companies that I would definitely be selling if they had a big run up, and I might be rotating back into something else. This is something that I'm quick to take profits on. Like recently, I've taken a 130% gain or whatever it was on Qualcomm. I did sell out of some other companies as well as they changed their business models for losses. But a lot of these companies I'm quick to sell on a big run up or quick to sell if they have some kind of negative major change in their company. But these stocks are rotated in and out, and these are good companies, but they are nothing that is irreplaceable. Like, for example, I invest in a lot of companies that I like to refer to as being irreplaceable. They're so dominant in their field. They're so good at what they do with such incredible track records that you really can't compare it to any other company out there. But these companies can easily be replaced, but they're pretty solid fundamentals. They're fairly good track records. A lot of these companies usually have 5, 10, 15 years worth of dividend growth, but these companies have not been paying out like 30, 40, 50, 60 years like some of these companies that I've had has. And mainly, number 4, this is the one to really focus on. Most of the reason why I end up purchasing these level 1 optional stocks is mostly because of the valuation and the yield. I want to raise my dividend yield as much as I possibly can while still being safe in my portfolio, and then also if I see something that's undervalued, I will be buying it as well if I think that it'll have some share price appreciation in the coming 6 months, year, 18 months, whatever the case may be. Now let's go ahead and look at the 8 stocks that I selected. Let's click My Pies, and let's go ahead and click Level 1, the optional stocks. And these are the stocks in my 24 that I selected that I would select as being my optional stocks. So there's the Southern Company, Store Capital, Altria, NextEra Energy Partners, Lockheed Martin, Honeywell, Starbucks, and Verizon. These are the tickers and the companies of these 8 that I currently own that I would consider as the optional stocks. Now basically, just very quickly, Altria, they have an extremely high yield, not a business model that I think is going to be super high growth. It is a business that's mostly focused on tobacco. NextEra Energy Partners, basically, I mentioned this before, while I am bullish on renewable energy, I'm just not as knowledgeable about the energy sector as I am as most other sectors. Utility stock, Southern Company, it's one of the best out there, but at the end of the day, it's just a utility company. There's a million competitors out there, but it does have some solid fundamentals and a really, really good dividend yield, so I've added the Southern Company there. I have Store Capital. Now, Store Capital is kind of like an interesting bet. I would say, in my opinion, what's the most interesting out of the 24 companies that I own, out of all these companies, Store Capital is going to be the most interesting. And in my opinion, this is really going to be a make it or break it stock. I'm going to bet that it's going to be a make it, but I think that this company is really interesting because they have a complete twist on the real estate business. So I really think that you should look into that and look into my past videos on Store Capital if you're interested in that. But Honeywell, they're basically like a little brother to 3M. They make thousands of different products. There's also some potential for quantum computing over the next couple of years. So a high growth opportunity there. But Honeywell, one that can be easily replaced, especially with its big run up. I have lowered my target percentage. And then we have my new addition. We have Lockheed Martin. I like their business. I like the sustainability. I really, really, really like the fundamentals of this company. But like I said, it's an aerospace business and there are competitors into the space. And these are the type of products, while the barriers to entry may be really high, some of the other competitors like General Dynamics, Raytheon Technologies, Boeing, a lot of these competitors have established businesses as well, but I do really like the fundamentals and valuation behind this company. Starbucks is one that, as a consumer and an investor, I'm a big fan of. While I should say a consumer, I'm not really a big consumer of. My fiance, my family members, my friends, so many people love Starbucks. And I've never seen the addiction to any food or restaurant to the addiction of Starbucks like I've seen it anywhere else. People like McDonald's, people like Burger King, people like me really love Taco Bell, but I've never seen an addiction quite like people to that of Starbucks. So I really like Starbucks. I like that their dividend growth opportunity is massive, but this company could be replaced because at the end of the day, it's just a coffee chain. And then Verizon, I don't really see a lot of growth opportunities there. Very similar to that of an AT&T. They have a pretty big debt load, a slow growing business, but the cash flow of this company is massive. Now these are my optional stocks, and next we're going to move to my level 2, the runner-ups, the runner-up stocks. Now these companies are stocks that I intend on holding for years, but likely not a lifetime. I'll be holding most of these companies, if not all of them, most, if not all of 2021, many of them even into 2022, and for the next 5, 10 years, depending on how things shape out with the market, with their business models, with their valuations. But these are stocks that I'm intending on, as of today, I'm intending on holding for at least the next couple of years. These are business models that are very solid, but valuation is taken into account. Now, when we look at my level 3, my forever stocks, I'm pretty much not selling them no matter what. I don't care if they double up in price. I don't care if they triple up in price. I don't care if they go to times 10. I'm likely to never sell a share. For me to sell out of my forever stocks, something horrible has to change with the business. I mean, a completely different business. They go down massive in share price. They cut their dividend policy, and basically they're no longer just a great company anymore. But when we look at level 2, I am willing to sell out of them if there was some incredible run up. And then number 3, overall bullish, but not like my forever stocks. Same thing, like I said, I'm bullish on these stocks for the next couple of years, maybe even the next decade, but it's a company that I would be willing to sell out of if something changed or if the valuation did just become insane. Now, I'll go ahead and look at these and I'll give you an example. One of these that I would be willing to sell out of, for example, let's go ahead and look at, we'll go ahead and say Visa. Visa is a high growth company. And if this company were to get to something that was absolutely insane run up, like right now it's at $200 a share and it's pretty rich, if it were to go up to say like something, I don't know, $600 a share, and it was not have the growth justified behind it, if it just grew to that level for pretty much no reason, I'd probably be considering selling out of it. But these are the 7 companies that I consider my runner-up stocks that I'm very likely to hold, that I'm very bullish on for the next 5 or 10 years. And notice something, my largest holding out of my 24 stocks in my portfolio is actually a level 2. It's a runner-up stock, as well as my number 3 and number 4. Broadcom is a company that I'm very bullish on now, but the tech sector is rapidly changing, and who knows what kind of company Broadcom will look like 10 years from now. I think it'll be much better. It could even be one of my forever stocks down the road, but they just don't have the track record that a lot of these other companies have, like a Pepsi or a 3M or a McDonald's. And I do think it's a sustainable business model. I think they'll be very successful, but that doesn't mean that it's a forever stock. It's very close to it, but it doesn't quite mean that. So the 7 stocks I have, Broadcom, I just explained that. WP Carey is just like that of a Realty Income. I'm very bullish on, but I think the company Realty Income has much more of a cult-like following, which keeps it propped up a lot easier. And more importantly, Realty Income, A, has a lot longer track record, and B, pays out monthly and raises quarterly. And this one only pays out quarterly, and that is something that is very unique to Realty Income. Caterpillar, one that I'm very bullish on, but is very cyclical, and that's the same thing with JP Morgan. I like both of these companies, completely different sectors. Banking, I think JP Morgan is the most adaptive. Now, I think that there's a good chance that I won't be selling JP Morgan anytime soon. If anything, I think they're one of the biggest banks out there that actually will be around for the next decade, 20 years, 30 years, anything like that. But that said, I could sell out of JP Morgan if it got to something that was completely insurmountable, or if there was another company like a Bank of America that really showed a lot of promise or something like that that had a better valuation than JP Morgan Chase. But I'm willing to pay a premium for JP Morgan because I like the company, I like their adaptability, and I like Jamie Dimon, their CEO. Next up, we have Cisco. This is a company that is one of the dividend aristocrats. Until this year, they did not raise their dividend. But Cisco has had a lot of troubles here in 2020. But overall, I'm bullish because people are always going to need food products delivered somewhere. Visa is a company, like I mentioned, very high growth opportunity, extremely high growth opportunity. And this company is definitely one of my dividend growers and not one of my dividend yielders. But that said, I'm investing on this company mostly for growth because I think that this company 20 years from now, 30 years from now, I'm not investing for this company today. I'm investing for what this company will look like when I'm 40 years old. So that said, I would be willing to sell out of this company if it went to something that was just completely ridiculous, that it would be irresponsible not to sell. But that said, I am extremely bullish on Visa over the next 5, 10, 15 years. Waste management is the same thing. Now, one of the reasons why I love waste management and why it's had a big run up, a horrible dividend yield, one of the reasons why I continue to own it is that one, I think very soon it will continue to be a dividend aristocrat, which by the way, last week they did just raise their dividend and announce a new share buyback program. But waste management, I just think, man, how is trash ever going to go away? Humans are always going to create trash. They might create more, they might create less, but the way I look at it, the population increases and people are always going to make trash. This is probably one of the most recession-proof business models in my portfolio. And out of the level 1 and level 2, this is by far the most recession-proof, probably in my opinion. I like that this company has almost no cyclicality to it, and I can invest in this company with ease in market downturns, in roaring bull markets, whatever. I can invest in this company no matter what. Now that said, let's go ahead and get to my level 1. Now these are the stocks, these are my forever stocks, okay? These are the stocks that you'll likely see on my channel, which by the way, I hope you follow along with my journey for the next several years because I intend on having this YouTube channel for multiple years out into the future more than likely. But that said, these are my forever stocks and these are the companies that you will likely never see me sell out of. So these are the companies that there's a 90% chance I will never sell out of completely. I may reduce my position, I may increase my position, I may move things around. A lot of it depends on where the market's at and what the company is doing, but that said, I will never completely sell out of these companies, more than likely. Now, for example, I'll just show you one of them. For example, like I'll say Johnson & Johnson. That is a company that I'm super bullish on for the long term, the only healthcare stock that I own. But this company, let's say, okay, right now it's at $150 a share. Let's say nothing fundamental changed with the business and it went to $350 a share. I would maybe consider taking some of my profits, say like 10, 20, 30, 40% of my stock and selling it and switching that back into another company that is much more undervalued, like say something of that like a Realty Income, another one of my forever stocks. So that is something I would consider doing, but I'll never just completely sell out of Johnson & Johnson. Right now I have 2.75 shares. If it had that massive run up, I might sell something like 1.5 shares, and still keep the rest of the shares I currently have because I'm so bullish on these companies that at any price I'll be buying them no matter what. So going back to this list, going to number 2, these are some of the most dominant businesses in the world. These are not companies like the level 1s, like I said, that can be easily replaced. These are companies that are so dominant. They have such an economic moat that there's really no competitors. And the competitors that they do have are nothing like the names that I'm about to list off. So they are not easily replaced. These are companies that, going back to number 3, are likely to have a lifetime sustainability. These are the companies that I expect. Right now I'm 21 years old. These are the companies that I expect right now that when I'm 40, 50, 60, 70 years old, that these companies will still be around and be much more valuable 10, 20, 30, 40, 50 years from now. And another thing about this is important to me as an investor. It's not something that's at the top of the list, but it is something I do take into account. These are stocks that I'm a fan of, not only as an investor, but I'm a huge fan of them as a consumer as well. And a lot of these brands, a lot of these companies, I use and see every single day. Now let's go ahead and get into the list. These are the 9 companies that I have on my forever stock list. And I'll go ahead and pull it up in the pie view in my pies. And level 3, my forever stocks. And you can see the performance. All these charts, they are in the green, and that's not only because of the roaring bull market, because all these companies, level 1, level 2, and level 3 are all very good companies. And these are the ones that I'm never going to sell out of. There's a 90% chance you'll see me own these companies till the day that I die. So if you're copying my pie, if you're following my investing strategies, and you want to follow me tit for tat, you want to do every single buy and sell that I do, well, get ready to see a lot of these 9 companies because they're likely never to go away. And if they do go away, I'm very surprised because something horrible, and I mean horrible, would happen for these companies. Now, Realty Income, I am so bullish on this company. Like I said, It's one of a kind. It's so unique. It's the only company in my portfolio. It's really the only stock in the stock market I can say that is actually a safe payout that pays out monthly, and it raises its dividend a minimum. The key word there is minimum. A minimum of 4 times a year. I believe in 2020, I believe it's on track to raise it 5 times. I could be wrong. 3M, the best industrial company out there. 60,000 plus products. I've been over 1,000 times, like command hanging strips and scotch tape and post-it notes and electrical lines and vehicle equipment and ink printer cartridges and so many other things that 3M makes that you don't even recognize, because this company is so big, they're such a big conglomerate, and they have one of the best dividend track records on planet Earth. I think this year when they're about to raise, I believe it's 63 years of consecutive dividend raises. If not something like that, whatever, even if I'm wrong on the number, I don't know it off the top of my head, it's something that is extremely high. Coca-Cola, man. I mention Coca-Cola and Pepsi all the time. Do you drink Coke? Do you think a lot of other people drink Coke? Well, if that's the case, it's probably safe to say that while this company has continued to pay dividends since 1898, I'm going to say that again. It's paid dividends since 1898. I'll believe that will continue, and I doubt that this giant will go away anytime soon. Home Depot has an oligopoly with Home Depot and Lowe's. It will likely be around for decades to come. This is an extremely profitable business with not only one of the best track records, but in my opinion, still has a lot of growth ahead. I was really scared to invest a whole lot into this company while we were entering the recession in April when I started this portfolio. That's why I started out so low. But this will actually want to be one of my biggest holdings as we get further along. And this company, I'm just so bullish on for the next couple of decades. Johnson & Johnson, I only own one healthcare company, and that's because this company is like owning a healthcare ETF. This company is so well run, the best management, constantly reinvesting in a new type of healthcare products with pharmaceuticals and medical equipment and all different types of products that you see and use every single day. Johnson & Johnson is the best healthcare company out there. And Kimberly Clark is the next one that I have up. And what's so funny about this company, basically the way I look at it, do you believe that people are always going to need to wipe when they go to the toilet? Do you believe that people are always going to need napkins when they eat dinner? Do you believe that people are always going to need to use Kleenex to blow their nose when they're sick or whatever? This company is the largest distributor and manufacturer of basic paper products in the world, and this company, I believe, it will always have a use for it. I don't think it's going to go away anytime soon. McDonald's. Now, something that's really interesting is that if you notice my portfolio, I'm really bullish on real estate. Now, I know it's really cyclical, but I love them. And McDonald's, yeah, it's a fast food company, but it's really a real estate company. They make most of their profits, most of their revenues actually from the real estate that they sell to their franchisees. And I think that that's such an incredible business model, because even if this company stops selling 50% of its burgers and fries tomorrow, this company is still extremely profitable from its franchisees that have to pay rent every month. So McDonald's, a great business model, can expand and grow very fast and is constantly adapting to new consumer changing trends like the McPlant, for example, bringing back the McRib every year, and then adapting to new things like mobile apps, which, by the way, if you haven't downloaded that, download it because you can get some crazy good deals off there. But adapting to things like their mobile app for the younger generation like myself, and I think McDonald's, it's a great company, guys. Whether you like their fast food or not, it's going to be around likely forever, okay? Go get the Travis Scott meal. Pepsi, I'm more bullish on Pepsi than I am even on Coca-Cola. Between some of the great brands that they own, like Cheetos, Doritos, Funyuns, Quaker Oats, Lay's Chips, Gatorade, Pepsi, and so many other products, this company, basically, if people are going to need something to snack on, if people are always going to need something to drink, I couldn't see a world where Pepsi goes under. If I had to choose one, which I don't think either will be going under anytime soon, I think that Coca-Cola would go down before Pepsi because they have so many diverse products and so many of their brand names are massive, including their recent purchase of Rockstar Energy. I think that's going to be another high growth category for Pepsi as we go further and further along. And last but not least, Procter & Gamble. It's arguably the most defensive stock in the stock market. We talked about cult-like investors. If the stock market goes down 50%, this thing's probably not going down 50% with it. If this company goes down 30%, then that means the stock market likely went down 40, 50, 60%. This has a very low beta, which is something I really like as a dividend investor. And while the dividend yield might not be massive, steady, consecutive, safe growth. This company is always going to be around. People will always need deodorants, shampoos, paper products, just basic household items, and it's very defensive because even in the worst of recessions, this company produces billions, and I mean billions and billions of dollars in net income. So there you go, guys. Here's my level 1. A quick look. There's my 8 level 1 stocks. You want to pause it. Here's my level 2, my runner-up stocks. These are the 7 holdings in that. And then last but not least, we have my forever stocks, the 9 companies that I'll never sell out of. So thank you guys for watching all the way to the end. I really appreciate it. Go ahead and sign up down below for all the stuff I mentioned down below in the description, including speaking one-on-one with me through a mentoring call, signing up for M1 Finance and getting 10 free bucks, signing up for credit card referrals and getting $50 and $100 bills, and then also signing up for your auto savings accounts to help you build a cash position as you invest in the markets. But thank you guys so much for watching all the way to the end, and I'll catch you guys next time.